Hi, Andre. Thank you for a very interesting topic. Just a quick question. Number one is, if I've already been taxed and now I'm using my money that's left, I buy property offshore, it's not bringing that income. So, while I was in SA, I was maybe in the 45% tax bracket. But now offshore, I'm not getting that much. Do I still have to pay the same percentage? And yeah, that's mainly my question. And do permanent residents also have to pay now SARS, even though they're forgaining the money in the country and they've gone back to their country?
Okay. Thank you so much for the question.
Thanks, John.
In terms of the rental property and paying percentages, SARS will tax your salary and your normal income based on percentages, whereas with the rental property, like the example we gave with the wall earlier, SARS will see that as a separate trade compared to your employment income. A calculation will be performed in terms of your income is X as per what was either received in your bank account or as per a statement from the estate agent, or perhaps your lease agreement to evidence the amount you are receiving. The deductions in terms of your expenses, water, electricity, some landlords provide DSTV, Wi-Fi services, X, Y, and Z that are deductible. Depreciation on the property that are deductible. You are then only taxed on the profit that you're making. Again, this is then applied to the percentage that you're making. If the property is offshore, SARS do consider the fact that there are foreign taxes, and you'll often be granted a foreign tax credit if you can prove that you've paid tax in a foreign jurisdiction to avoid the double taxation of the taxpayer in question. In terms of the permanent residency question, that's also very important, but we must consider tax resident as the concept in tax and a resident in terms of immigration or immigration are two completely separate concepts.